G'day everyone, welcome back to Pete's Investing. In this strategy edition, we'll be talking about trading using the ADX indicator coupled with a long-term moving average and applying a percentage gain and average down approach. So what we've got here is the price chart, a profitability chart up here, number of contracts we're trading, and down here we're using the ADX indicator, and I've put a parameter of 500 period in the ADX. It's normally by default 14 period in most charting software, but we're using 500 period to give it a longer term outlook. So the entry criteria is we'll make sure first of all, we've got a moving average 200 here. We're going to make sure the close is greater than the moving average 200, so the price has to be above that line. Secondly, the ADX or the DI plus line, that's the green line here, is greater than the ADX DI minus, which is the red line. What I've also done, you can see here there's a jagged green line and a jagged red line. What I've done is I've applied a moving average 20 to each of those just to give it a bit more smoothing. So whenever that moving average of those two respectively cross over, the DI plus crossing over the DI minus, that's our entry point, and that's where we entered our first contract. In this case, I'm trading the FTSE 100, the UK market index, share market index. So I buy one contract at that point there. That's our entry criteria. We exit when the close, it's closed out there, when the close is greater than the entry price. Obviously we want to make a profit, so we don't want to close it out when it's below that price. When the close is greater than the entry price, and the reverse is happens when the ADX DI plus crosses below the DI minus. So it just touched it there, but it didn't close. It stayed above, then it closed out at that point. That's where we close it. Next, we'll be looking at the average down approach. So again, here we've got, and again, you can see there the number of contracts. When it steps up, it means we've added more contracts there. So again, the entry point is exactly the same as the single contract entry. We enter our first lot of shares there when the price is greater than the moving average 200. When the ADX DI plus crosses over the ADX minus, so that's our entry point. Now the price has gone sideways and somewhat in reverse, and our second parameter to average down is we have to wait till it's dropped by at least 5% from our entry point. So it's got to drop by at least 5%. The same entry rules apply as the entry back here, so the price has to be above the moving average 200, and the ADX plus, the green line, must cross above the red line. Now, it's dropped a little bit below there again later, but it's crossed over it there. And also back here, you'll notice it did cross over here, but we didn't enter because it didn't drop by more than 5%, so we didn't enter any more contracts. We want to make sure we enter enough, we drop by enough points to so we don't enter too many times. So 5% is a nice optimal amount. Again, this is on a 4-hour chart. If you're going to trade on a larger chart, you might want to drop down by 2 or 3%, or on a smaller time frame, like maybe a 1-hour time frame, you might want to drop by half a percentage point. So again, we enter when a second lot of contracts, we enter the second lot when it's above the moving average 200, and the ADX DI plus is greater than the DI minus. The price subsequently gains, and it closes out here when the ADX plus drops below the ADX minus. That's where we close out the contract. It's got to be greater than the average price now. The average price would have been somewhere between that point and that point. So the average price would have been somewhere along that, probably a support line there. And when that ADX crossover again, we close out. And that shows you the profitability at that point. 1437, we started off with 874. So I made a few $100 there in that period. Here are the trading rules for the ADX crossover. So we enter when the close is greater than the moving average 200. The ADX 500 DI plus crosses over the ADX 500 DI minus. That's our entry parameter. The exit is when the close is greater than the average price, and the reverse of the ADX rule is when the ADX plus crosses under the moving average 20 of the ADX minus. The average down approach is the same as the entry, as above. But we've got to wait till it drops by at least 5%. Then we buy 1.5 times the number of previous shares or contracts entered. Okay, what we've done also is I've back tested the program today against the other programs we've tested in the past. And what we do with the contract for 4-hour periods, or in some cases 15-minute, I back test against these indices. They're pretty much global share market indices, and also including gold and silver. So what it shows here is the profitability in the first table. That's what sort of results it returned in the last few years of back testing. For the same period, for the same indices, the drawdown requirements, and a drawdown is basically from the highest point of profitability. That highest point of profit, so looking at the whole history of a particular chart. So probably looking at this, I would say that's probably the highest point of profitability to the lowest. So it takes that as the key drawdown, and we test that against the revenue returned. So, and that's what we look at. So that's the profit, the drawdown, and the bottom table down here shows the percentage of profit over drawdown. It was just the percentage of that divided by that, and that gives us an average down there. And lastly, what I do, I rank those. So the higher the percentage, the better, and I'll rank those to show where the latest program sits in the testing parameters we've done. You can see here today's program, the ADX test, that ranked 9 overall. That's not a bad result, 31,000 in terms of revenue, 3,500 in terms of the maximum drawdown, or the average drawdown returned, and 135%, which is just basically the profit over drawdown. And these are the other some of the other programs we've back tested over the history of these videos for these indices, and the CCI 350 happens to be the best result so far. Go back into the playlist and look for those to get a better understanding how they work. Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. This ensures the probability of the shares of the company you're buying has had a good track record and more likely potential of future growth. Buy stocks which pay dividends. Do a quick search of the stock before buying to ensure it recently paid a dividend or is about to. This is a good indicator that the company has future potential of growth. If the company recently stopped paying dividends, it may be a sign that their growth potential may be challenged. Don't short positions, go long only. If you short up an instrument which pays a dividend, you'll end up paying that dividend to someone else who went long on the same instrument. Do not trade on news. Price is already factored in the share price. If you read an article in the finance pages which talks about an event on the stock you're considering, the chances are it has already been factored in the share price. So you've missed that boat. I did a video in September 2021 titled Uranium Stock Too Late to Trade, which demonstrates the effect that news has or hasn't and the share price action. Suggest you watch that video to get a better understanding. To be able to ask specific questions, feel free to log on and sign up to the Pete's Investing Patreon page. That's where I get more specific questions answered and help support the channel. Thank you.